India faces a significant energy security risk from the ongoing crisis in West Asia. The US-Israel-led war against Iran has escalated into a regional war now and nearly shut the Strait of Hormuz oil trade route. India is particularly vulnerable to crude supply chain disruptions as the country imports more than 85% of its oil needs. India's oil imports via the Strait of Hormuz average roughly 2.5 million barrels per day. That is about half of India's just over 5 million barrels per day total crude imports. But those flows have been disrupted amid the Iran crisis, which has now entered its 7th day. According to Keller, which is the country's total reserves theoretically cover around 40 to 45 days of imports in a crude disruption scenario. India can tap supplies in Russia, West Africa, Latin America and the US to make up for the shortfall. In fact, Washington on Thursday said that it has given India a temporary waiver to buy Russian crude already at sea. But that is only a stopgap arrangement, and sustained disruption would materially increase the import bill. For now, the immediate impact of the Iran war is on prices. Benchmark Brent crude crossed $84 per barrel. That is roughly 10% more since the Iran crisis. For India, higher prices mean higher import bill. A higher global rate would mean Indian refiners will bear the difference in cost or pass it on to the consumers. Despite the fluctuations in global crude oil markets, petrol and diesel prices in India have largely remained stable in the recent years. Retail fuel prices have seen minimal changes since May 2022. Back then, the central government and several states had reduced excise duty and value-added tax on fuel. For now, reports show that the Indian government has assured there will be no change at the pumps. And the reason for India's assurance for no change in price is the government's calibrated approach in the recent years. Oil marketing companies were allowed to improve their margins when international crude prices were low. This was done to aid refiners in keeping the prices stable during a crisis and shielding consumers. But the real question is, for how long can India hold off before hiking fuel prices at the pumps? And let's try and get an understanding of what this means for global oil markets as well as the fuel price impact here in India. I'm joined by Dr. Suyash Bhatt. He's going to help us understand what this means. Dr. Bhatt, thank you very much for sparing the time and speaking with us on WION. I want to first understand from you how you're seeing the global oil markets amid the West Asian conflict. There has been a lot of speculation, a lot of concern as to what exactly will happen. We have been seeing fluctuating prices going higher up as well. But at this moment, on the 7th day into this conflict, how are you viewing this?
It's a challenging time. I think the Qatari minister also today, I think, spooked the market, not only in India, but also globally by predicting that the oil may touch $150. So this is not a good news, actually, and which is why you could see our Indian markets also correcting towards the closing deeply. And I think this is a big concern globally because this will spike inflation and the much-awaited respite that people were expecting from Fed rate cut due to the new governor, expecting that the prices would go down. It may be now out of the window because this is altogether a new macroeconomic situation where oil is under pressure. Not only oil, but even gas prices may go up, not only in India, but also globally. So this will spook the markets across the world, and fear of inflation is back, including fruit prices going up. I think already freight costs are being changed across the shipping routes, so even that is a big concern. So prices will be impacted deeply, and anything
Bhatt,
above $100 is a bad news.
You know, in very layman terms, not just getting into the technicalities, because a lot of people do not understand the technicalities that are involved in global crude oil pricing and the fuel prices being impacted by them. Just in very simple terms, here in India, when we talk about fuel prices, how high can they go? And for how long can the government sustain not letting it come on to the consumers?
So in very simple terms, currently, say, from a Delhi perspective, your crude oil or the gasoline price is 97. close to 49% of that is taxes. So 57 rupees is the actual price of gasoline or petrol for the government as a cost. And the rest is all taxes. So if $1 increase in barrel could impact 10 to 15 basis point in terms of pricing. So for the government, I think it has a room to absorb prices up to, I would say, around $100 to $120 because 40% to 49% is taxes. So the government can absorb these prices by reducing taxes. So that's one thing by which the government could do it. But if this sustains for more than 3 to 4 weeks, then we are in for trouble because you would have, again, at the end of the day, the government doesn't have infinite resources. So they would have to pass this on. But the last that we heard from the petroleum minister is that India has 79 days of reserves. And also recently, as you just mentioned, globally, it's flashing that US has given a 30-day waiver for Russian crude oil to be imported. Yeah. And we already have 15% crude oil being imported from Russia. So for us to switch back to Russian oil, which was originally at 40%, may not be a big challenge. But globally, I think this is a challenging environment because the discount that we were getting, we may not get it anymore because obviously, if there are more takers for cheap crude, then probably the seller would also have their own way of keeping prices higher. So this may impact Indian consumers in long run.
Okay. You talked about reserves, and I was coming to that next. One is the issue of the Strait of Hormuz being impacted by the West Asia conflict. The other issue being that oil production is being hit across the West Asian region. And then, at this point, then comes the strategic reserves that individual countries will have. You mentioned the Petroleum Minister, Hardeep Puri. He said that, yes, we do have 2 of our strategic reserves that could help us in this time. But for how long? The question is, how significant of a help can strategic reserves provide us amid this conflict?
So again, as you rightly said, strategic reserve means it would generally be a last resource that you would want to tap onto. So if the Strait of Hormuz stays, shut for at least next 2 to 3 weeks, that's a clear sign that the oil is not going to come out so easily. So this will put pressure on the prices, and most of these oil marketing companies don't buy it in the spot market like you and me. When we go to fill the fuel, we are being charged today's price. But the oil companies buy it in forward market, so they have hedging mechanisms by which they can insulate themselves from changing in prices. But this cannot be done for too long. So as I said, if this continues for more than 3 weeks, the prices at the ground level may impact, and the government may be forced to tap into the strategic reserves. But more than oil, I would say that gas is something which may be a bit of a concern than oil, because oil, as we discussed, we have a fallback option of Russian oil. But for gas, 40% of gas that comes to India comes from Qatar. So if the Strait of Hormuz is shut, then gas is something which we may be in trouble. And which is why you would see since 2 days, as the news broke out, the government or the gas companies have started cutting down the industrial gas supply and to make sure that the residential or the retail demand is met. So gas is something which is more of a concern than crude oil. But anyway, in 3 weeks, if this doesn't get addressed, all of this may be recalculated or recalibrated.
So you're saying for at least a month, 3 to 4 weeks, we're good, we can manage. But after that, we should be very worried about how the situation is unfolding. I'll leave it there. Dr. Suyash Bhatt, thank you very much for joining us on WION, helping us getting this understanding of how this conflict affects Indians.
Thank you, Sharon.